again, the founder of Travelocity and ex-chair of Kayak, talking about AI in the consumer industry, and Gary's on his way. So let's start off. We talked about AI a little bit at the lunch, and by the way, just a note on lunch. That was supposed to be done a long time ago. It feels awkward the way this is playing out, but sorry for that awkwardness. So maybe, Jane, there's been discussion of climate tech, and you're both a family office investor and a climate tech fund manager. Maybe you can tell us why we should be focusing and how on that in that segment.
Hello?
Yep.
Okay, all right. So climate technology is definitely like a very important percentage of your allocation. If you haven't done that yet, it's the climate change problem is really real. So it doesn't matter if you believe or not, right? In California, Florida, insurance companies are leaving because of wildfire, hurricanes, and you see the wildfire memory. Extremely heat weather in India. So internationally, the governments and private industries are acting up for climate issues. So that also means that big companies are looking for solutions for transitioning their portfolio into more sustainable, and not only sustainable for the literal world for environment, but also for continued economic prosperity. So as a climate investor, we actually get a lot of co-investors coming from the oil and gas industry for investing climate technology, because they're also looking for the next step for themselves, right? What happens next when the oil and gas draining is like becoming non-economical, just from a pure making money perspective, what is next? And the climate technology, I think it's for people who have the assumption if you think you're investing in climate, you have to be like, adding actual costs is actually not exactly the case, because many of the technology innovation, it's bundled with the future of prosperity. So I want to take EV as an example. So EV is not on the opposite side of internal combustion engine, but if you see the robo-taxis upcoming, in California it's already testing, in Phoenix is testing. So probably like later this year, next year, robo-taxi will be like more and more on the road. And they can only be used on EV, because EV is essentially a big computer. So the environmental and climate transition is also a technology boom, and getting a lot of the opportunities, out there. So for us, for the investment in climate change, is really a betting on the future and supporting, catalyzing the future we want to see. And I hear public pension are making comments on how they're allocating capital. Just in California, two bigs of public pension, CalPERS, CalSTRS, they're allocating 1% to 2% right now exclusively on climate-related asset classes. So not only just venture, but can be like real estate, can be real assets. $1 billion is what the CalPERS have put it out there. They're looking for assets in climate, and also they're trying to help other public pension to understand how to allocate it in this sector, regardless, if there's political turnover, it doesn't matter, because big companies are looking for solutions. Yeah.
A little different than Florida.
Yeah.
Okay, so Patricia or Jack? Yeah. Just know, Patricia, Jack's already got notes, so.
What's the question?
Your question is, who wants to go first?
Well, what's the topic?
I thought you were going to talk about...
The most exciting emerging industries and trends, Jack.
I don't want to confuse the protocol, but I made a commitment to talk about her contingent upon whether she would talk about me. But then...
You've never done that before.
Subsequent to those two commitments, we did a deep dive and concluded no one would care. So we've dispensed with it.
So you're walking off the panel?
I want to, well...
First you're going to stand up.
I would like to suggest linkage that the 361 group has not addressed in the past, which may give rise to some interesting new lines of inquiry relative to where to invest. And when we talk about private investing, obviously VC, PE is talked about at some length. There's another world, which is the angel world. And there are 272 institutional angel groups in the United States that are all organized under an entity called ACA, American Angel Capital Association. And those 272 groups, to be differentiated from clubs, at fraternity or sorority houses or country clubs, et cetera, those 272 operate under a standardized playbook that has, among other considerations, deep diligence. And therefore, there's an angel world that I think we should endeavor to get our arms around. And there has been some discussion that Mark has advanced relative to the idea of creating a fund of funds under the auspices of 361 that would invest only in the angel sector. Now, separate subject. AI obviously has the attention of the investment world, and there are, across the last 18 months, 16,442, to be unnecessarily precise, AI startups have been founded, which is a rate of 30 per day. So 30 companies per day, 7 days a week, are being launched in the AI sector. And that's reflective of what is arguably a revolution that is manifested and is being accelerated by the functionality of AI. AI is not a new subject for this group, of course. And it's not a new subject given her immersion in it. Take the 16,442 that have been launched in the last 18 months, and let's assume that the majority fail, just because that's what happens in real life, irrespective of AI and the utilization of. However, it also means that a pretty good number will become successful, and there should be some unicorns that emerge from that area as the revolution occurs. The MIT team, as an example, pardon me for touching your person. The MIT team plans to invest in 50 AI or technology-based companies in the course of the next couple of years through the program that she and her colleague articulated earlier. Imagine if a small number of those become unicorns and therefore are worth or working toward being worth $1 billion, that being the definition of a unicorn. And how many, just say a number, how many of the 50 companies do you think might become unicorns?
So since we're first-time fund managers, I'm not allowed to actually provide any projections, but I'm allowed to refer to the benchmark numbers, which, as I mentioned before, if you compare VC to venture studio approach, it's 5% with venture studio approach. And we believe we will be better than that.
So let's round down, even though Mark would rather that we round up. So you're going to have 2 unicorns worth $1 billion, which is $2 billion coming out of that portfolio midst a revolution that is occurring in our midst. And therefore, I think it would be interesting and economically beneficial to us as a group to bear down on how to identify AI sector or AI-based companies that represent substantial opportunity, because there is a revolution occurring, arguably greater than the Industrial Revolution, when handwork turned into machine work in the distant past. So assuming there's a revolution, assuming that we can access AI companies such as through your program, and given that there's a whole world of angel investing that's generally not visible to almost all of us, many of those AI-based startups are going to end up being backed by angel groups in advance of when they finally manifest themselves to VCs and later PEs. So we could launch an initiative to find attractive AIs in the angel sector and do so in a manner that should give us a competitive advantage as a group, because there aren't groups out in the world that are focused on the angel sector. But some of us have direct exposure there, and we can build a program on the basis of that.
Let's ask, who's a member of an angel group club association? Which one?
We're called the Blue Angels. We're related to Ocean Tech, and we just issued a white paper on AI transforming ocean-related industry.
Anyone else?
Monaco Angel Group.
Monaco Angel Group, so local to anyone else?
Again, they're just a couple of I guess we have WhatsApp groups. We have maybe 25 to 50 people in each of these angel groups. It's not like a formalized fund.
There's the informal that you don't even track. Anyone else on an angel group? Which one? Karitsu. Anyone else? So, is she going to talk about you now? Is that what?
Yeah. I'm on the verge of handing her the microphone.
Okay.
After I make one last comment. We have an angel investment program that lives and breathes within 361, and I don't remember the rules about what we can or can't promote.
Oh, you remember
them. But it's
them.
there. And therefore, it could become a starting point from which we could build an enterprise of interest that would incorporate these two disparate dots that I'm referencing that could be linked together for our collective profit. And it is now the turn of somebody else. There you go.
No, I like the idea, Jack.
I like it too. We'll be happy to provide those deals for your angel group.
You could be on our advisory board.
I think speaking of AI and AI deals, I mean, I think I mentioned that before, right? There's a lot of hype right now. We get a lot of deal flow coming in stream to our venture studio, either people who want to build or people who want us to invest in their deals. I would say most often what we see is just what we call screen AI. As I mentioned before, it's just a wrapper. They're using their data through API. Again, I think for people who are not maybe so much into the technology, it may look the same, it may look really fancy, and it may look like you have a beautiful interface. These guys are doing a really cool thing.
But it's a hallucination?
Well, I mean, they may even get very low hallucination rates, and there may be times when that's not a very good thing even, right? But it's not leaving any lasting value. So that's a key thing to look at. I like referring to, for those of you who have heard me before, I like referring to the website called There's an AI for That. That tracker stands at tens of thousands of AIs for different tasks and jobs. Again, more than 95% of that is what we call screen AI or wrappers. not anything I would say is worth investing in. So really finding the right opportunities, finding those that are going to leave really AI-first companies, AI-native companies. Are these companies really using their data to build an even better tool and constantly improving based on that, or are they just using an API as a wrapper? So those are key things to look at. Where does the moat come from? Looking at the healthcare industry, it's not necessarily the data actually, but actually even penetrating in that complex industry, it's really understanding those processes. And so that in itself is a moat to be able to enter that industry, build out, go to market, have those partners. That's also one of the things that we're providing with the Venture Studio approach. In terms of things that we're excited about, I mentioned personalized medicine before. So there's just so much advancement with AI, and also the convergence between, quantum computing and AI is just going to be transformational. If you look at sort of the protein discovery process throughout the history of humankind, we discovered 200,000 different sort of proteins. After DeepMind launched their sort of AI tool for this, they discovered 2 million new proteins overnight. And these are all important for medicines and especially personalized medicines. Right now, there are, I think, 12 million or so serious medical errors every year. And that might be not because they did not have clinical trials, but there isn't, first of all, there are very few women who are sort of, in those clinical trials. It's typically, white men. And what that does is, what works for that sort of group subset of people does not work for me, or maybe it doesn't work for my sort of medical background and history and everything I've been exposed to. So being able to use AI to sort of simulate that and simulate the outcomes can really help us to create perfect personalized medicine and tools.
Well, since you're sitting next to Jane, she's focused on climate tech. Do you have any AI for climate tech portfolio companies?
Yeah, we have. Oh, sorry. You wanted to talk about that?
Yeah. So the type of AI application in industrial technology, including anything climate tech, it's less on the language modeling that you use for ChatGPT, but more the machine learning, deep learning, which there are a lot of usage of that for discovering new materials, looking for new types of formulations, because the traditional deep learning can give you the precision, and whereas the large language modeling is like more inferencing for what is the next. So we had a portfolio company, for example, they do biomanufacturing continuously, and it's their customer, pharmaceutical companies or cosmetic company or food companies, they can use the AI to find the best potential combination recipe for what's the next products coming out of it. So I think it's really, really like a part of the discovery right now. People don't really even mention them as an AI company. People think, everybody's doing that as a part of the discovery of the new materials or new work.
Gotcha.
Yeah, and I think that's actually the material science is actually, it is important for climate tech, but it's also something that touches upon every single sector in the world, right? And the same thing there. I mean, the speed with which we're discovering new materials is also going to transform every single sector.
Questions? Yep, Maren?
Thank you so much, Mark. Thank you. And thank you so much for all sharing your wisdom in this space. I super appreciate all of you. Thank you. And I'm Maren Ryan Sarif. I'm a single family office and also the founder and CEO of Lightspace. We are a climate tech company utilizing AI. And so one of the question is, when you're utilizing AI for climate tech in particular, what are the metrics and what are the mechanisms that you're looking at for AI? What type of galvanization techniques? Because one of the companies that we're working with is called Orbital Insight, which is galvanizing all of the, they do AI for global satellite data. To make sense of all the global satellite data in order to make more informed decisions about how we take care of land and how we take care of the climate. So I'm just curious, what are you feeding your AI with, is my question.
Yeah, so AI is definitely in those type of application startups. So, even the satellite or climate prediction company, we saw probably like 20 plus of the companies now. So almost all of them are doing a little bit work, utilizing the existing data, try to understand what the weather patterning or climate patterning. For some of the companies, getting even more bottom to the like climate science, so they combo the climate physical model with AI as well. So you can actually predict when the hurricane's coming, what's the magnitude, and AI can get it to the granular, super granularity that traditional, like the satellite imaging, is not going to give you. So those companies can partner very well with insurance companies, try to figure out, what's the best premium to sell. So just for example.
You used the word predict, which that's my last question.
Yeah.
Do you guys have a prediction? We're here 1 year from today in some of the fields, whether it's the venture field or AI field or climate tech or otherwise. What are your predictions?
I think there's a question.
No. Oh.
Sorry, I don't want to take over, but I just competed in the X Prize biodiversity competition for 4 years with a team of 176 scientists. So it sucked. I tell you, it was the hardest job I've ever done. It was looking between where the commodity market is related to carbon trading, where we're looking at data, where we're looking at data storage, and who's going to own or manipulate the valuation of that data. And where do the indigenous people, where do the farmers who have chemical destroyed governments? I'm working in Zambia and Zimbabwe right now. They have a food security problem. They're not eating anything. All we think about in AI is also an extraction of commodities. When you go to Africa, where are we getting all our minerals and our resources, and who's buying or selling it? Or, sorry, I won't say the nation, but who's actually transporting it out of Africa to be a commodity externally, where people in Africa aren't being fed? And then that one government is actually saying they're going to do a digital currency right now, which is fabulous, except they don't even have internet. So how can they supply it to anybody? So I'm talking about food security, indigenous rights, and I think AI is actually not a solution for everybody. It's very inclusive. It's very much dictated by multiple first world. And it's true, because we have that combination. But in the beauty of it, I'm just bringing it out, because what we were able to do was use the science for environmental DNA. My team had 176 scientists, including MIT, including Cornell, including Singapore University. We did environmental DNA, we did water, we did sanitation. Singapore had no idea how many contaminants our scientists would pull out from their public drinking water. And we are able to use AI to identify the water. We're able to see who's in charge of the trace or the tracking of those chemicals. And we're able to also empower part of our team, had the indigenous environmental lawyers and a hardcore team on it, looking where is the governance. So we talk about environmental social governance, and I think that's where I come to. because it is the sector, and we can use AI for good, but it has to be ethically managed, and then who's going to finance it and give it to others?
We talked about AI ethics in Palo Alto. I was going to give you guys a last comment to do a prediction, but let's. But you had a quick question, Scott.
So a little bit of a comment too. I think you used the word wrapper, which was perfect. I'm a little closer to the ground because I'm investing in companies that are 1 million to 10 million top line a year. We have a lot of companies pitching AI. And your first filter is that there's a whole lot of stuff out there that just isn't AI. It's chatbots, or wrappers is the perfect word for it. But also that other tech is getting pulled in because AI has so much sex appeal to it right now, where the tech is good and you almost need to shed the label a little bit and focus on like projects like that where there's actually value. If I wanted to go into this space right now, I'd be buying data. Because all forms of AI are going to need data. So it's data storage, production of data storage, stuff that supports the space. Because to me right now, looking at all these companies, the vast majority of people screaming from the mountaintops are almost, I hate to call it this, but they're hype masters. And they're trying to hype what they're trying to create, which turns into something that creates a paycheck, as opposed to there's a legitimate solution in play related to new tech. It's kind of like right now, you almost have to look at it, it's like Uber 19 years ago. There's probably going to be a good bit of runway before we see a lot of traction in AI.
So now I've run out of time. Because we have the last panel, and then we go to breakouts. But we will continue the AI discussion, the climate tech discussion, the VC discussions, the global discussions, and then the next panel being about optimizing philanthropy, impact, and next gens. So if I could, and even the public and private markets discussions.
Hey, Mark, with respect to the last point made, there's substantial support for that assertion. That's a valid point. And the data field is rich for development, with or without the more granular reach of AI. So the whole idea of a few years ago that data is the next oil or whatever is arguably still true.
Can I also just make one quick comment? I think you had a point, so saying some of the companies, they try to get themselves AI-ish to be in this market. So I actually think there's a hype in AI right now. There's so many companies, you don't need AI to have a very, very good business. And, especially the scientific breakthroughs, not all of them need AI. It's a good application if you have that. Wonderful. If you don't have that, you can still have a really robust company.
We'll go deeper in these breakouts. So I got to break up the panel and say.
What if we don't want to stop?
Then we'll have an issue. So last panel, if you could come on. Thank you to this panel. Come join our 361 firm community of investors and thought leaders. We have a lot of events created by the community as we collaborate on investments and philanthropic interests. Join us.